Hi, good afternoon, class. How you guys doing today? In this little video, I plan on going over this, what we did in class today. I feel like if I explain it to you guys and you guys can understand it, then that means I know it myself. Okay, so this is the problem right here. Treasure Island Hotel started operations on July 1st, 2022 to manage the company's officers and managers have requested monthly financial statement starting July 31st, 2022. The adjusted trial balance amount of July 31st are shown below. We got the cash, account receivable, all this, all debt, all debits, and we have all credits. Right. So for the first part, it's A. Prepare an income statement for the month of July. We're gonna show revenues, expenses, and find the net income. So let's prepare the requested financial statement for Treasure Island Hotel for the month of July 2022. This is the income statement for the month of July 2022. As you see, we have revenues and expenses. And with these revenues and expenses, we found the net income. All right, next we have part B. Prepare a statement of owner's equity for the month of July. As always, we're gonna start with owner's capital. That's the normal balance. So B, statement of owner's equity for month A of July. All right, so here we always start a statement with the name, the statement, and the time period. And then we're gonna put the beginning owner's capital, which is $10,640, because that's what we started with for the month. That's what we're working with. And then we're subtracting the owner's drawing of $800. And then the net income of $9,325. All that gets added together, and you get the ending owner's capital of $19,165. So I'm gonna try to simplify all this mumbo jumbo. Okay, I'm gonna try to simplify it. So let's simplify it. In A, right, income statement, money in and out for the month of July 22. We're gonna put the money in revenue. Money earned from services is $26,610. That's how much we earned in services, right? And then, right, that's the money we earned. And then we're gonna subtract it from 17,000 and get 9,325. So this means that in this month, the hotel made a profit of $9,325 in profit in July. That's an explanation for question A. Next, we have part C. Prepare a balance sheet as of July 31st, 2022. So this is the balance sheet, which shows the financial position of the company as of a specific date. In this case, it's July 31st, 2022. For this, we're gonna have assets and liabilities. This balance sheet that you see here reflects the company's assets, liabilities, and owner's equity as of the end of July 2022. So let me break this down one more time. So pretty much, you're gonna collect your money information, you know. First, gather all the money information for a specific time, like a month or a year. This means you need to know how much money you got and how much you spent during that time. Then you're gonna put your money in, your earnings, you know, your assets. Write down all the ways you got your money. This could be from selling stuff, getting interest from a bank, getting money from investments, or renting something if you have it. Total your earnings, you know? Find the total, add up all the numbers you got from step 2, to find the step 2 was the money in your earnings. To find the total amount of money. Question C, all right? This says prepare a balance sheet as of July 31st, 2022. So, in order to prepare a balance sheet, we need to know, this is a balance sheet, by the way. So, that's question C. Balance sheet. What the hotel owes and owns. That's what we need to know. Assets and liabilities. And stuff the hotel owns, like assets, that'll be cash, money, like money people owe for services, accounts receivable. That's another way to say it. Prepaid rent, you know, like future rent. That's what that counts for. And then supplies, things for the hotel, equipment. That's all big stuff for the hotel, like machines, stuff like that. Like laundry machines. You ever been to a hotel? They got laundry machines. That's equipment. And then over time, as you may know, there's equipment, laundry machines and stuff like that. They get depreciation. That's like a take away the worn out. Like they take out that stuff. So that becomes contra asset. It contradicts. It goes against. It's a contra asset. And all the stuff the hotel owns in total, when you add it up, you add up all the assets, you get a total of $28,285. That's all assets alone. And as I said earlier, for the balance sheet, we're looking for assets and liabilities. So liabilities, the hotel borrowed money, that's notes payable. They took $6,000, right? Maybe I should show you this better. They took $6,000. And money owed to suppliers, that's account payable. That's money owed, $2,140. Money owed to employees, that's salaries and wages payable, $360. Money owed for borrowing, interest payable, $40. Money for loans, that's money for loans. Or as they put it here, interest expense. Money for services not provided yet, that's unearned service revenue. Remember, service revenue, that's money for you. That's for performing the action. Unearned means that the action has not been performed yet. You know, that's some money paid in advance by the customer. All the money the hotel owes, when you add up all the liabilities, right? All the liabilities, when you add it up, you get a total of $9,120. And then we're gonna do owner's equity. Owner's equity is the owner's money in the hotel. So that's gonna be the 10,000 from earlier, right? We're gonna take the 10,000, then we're gonna add it with the 9,000 from the liabilities. We're gonna get a total of 19,100. Oh no, we take the I'm sorry. We take the assets, 28,000 minus the 9,000, and we get $19,165. And that's a total of liabilities and owner's equity, 28,000. So the hotel stuff and money add up to $28,285. I hope I explained it well enough. And if I didn't, feel free to correct me in the chat. But for right now, that's what I got. That's the best I could explain it. I'm trying here. So when you're preparing your income statement, always put your company name, all right? It don't matter if you don't even know what you're doing. Just put the company name. And then put the income statement for the period ended, aka the date, you know? Put your revenue, that's, you know, how much you made. Your sales, your interest, income, dividends, rental income, total revenue. And then you put your expenses. LOHR, all those, and then you put your net income. That's how you prepare an income statement. It's assets, revenue, assets, expenses, liabilities, assets, liabilities, total, assets, liabilities, total. And remember, these all get added up. And then total revenue gets subtracted by the expenses, and then you get your total net income. Remember this, please, please, please.